The seventh President of the United States, Andrew Jackson, once said, "If people understood the tremendous injustice of our monetary and banking system, there would be a revolution by tomorrow morning." This is what he said before the creation of the Federal Reserve. Because since its creation, the banking system has changed radically and favors the rich even more. The problem is that most people do not know how the system works, do not know how money is created, and do not know how the Fed works. Therefore, only a small part of them benefits from this system, as opposed to everyone else. Henry Ford, the famous American businessman, once said, "It's bad enough that people do not understand our banking and monetary system, because if they did, I believe a revolution would erupt before tomorrow. Let's find out what the banks do not want us to know, what they hide, and what you need to know to benefit from their system." The first thing you should know is that all money is debt. One of the fascinating things about people is that they spend their whole lives working, creating businesses, all in the hope of earning more. However, most of us really do not understand where money comes from, because this paper is money and nothing else. The most important thing is that it's a piece of paper with some images and numbers, and this means that someone is printing it. But no, it's not the government doing it. In fact, the government borrows money just like you do. And believe me, it is more in debt than you imagine. It seems strange because if the government doesn't print money, who does? And who has the power to do it? As always, the government must build bridges, schools, and hospitals to support the country. But all of this requires money. In the past, it was much easier. Gold and silver were the money, so you either earned it or borrowed it from someone else. But in the modern world, it works differently. When the government needs money, it borrows it from the Federal Reserves as a loan with interest. But where do the Federal Reserves or central banks get the money? It does it with ink and paper. Then, the government uses that money and injects it into the economy as public spending. It builds schools, hospitals, bridges, etc. This is one of the ways money enters the economy. The people who receive the money or are paid by the government deposit it in the bank, and then the bank lends it to someone else. And that is how it spreads around the world. But this is only how a small fraction of the money is created. Around 95% of the money is nothing but digits in computers created by the banks. So when you deposit your money in the bank not only keeps your money in the vault, but also loans it to someone else at higher interest, because that is how banks profit. So, why does your bank account say that your money is still in the bank and you can withdraw it whenever you want? Because banks are authorized to lend 90% of the deposited money and retain only 10%. So if you want to recover some of your money, you just have to go and withdraw it. Let's suppose you deposit 100 euros in the bank. The bank will lend 90, but at the same time, it will create another 90 to show you that your 100 euros are still in the bank. Then, those 90 euros will go to another bank, which will keep 10% and lend the rest to another bank, creating even more money. And so on, until those $100 they initially had become $1,000. This is how most of the money is created. That is why 95% of our money does not exist physically. And the strangest thing about this system is that the money, as soon as it was printed, was lent to the banks and the government. In other words, the government or banks must repay more money than the amount of money that exists in the system, which means that the debt can never be paid. Let's suppose, for example, that there is no money in the system. If you go to request a loan of $10 from the Federal Reserve or another central bank, it will respond affirmatively. But you must return them with a 10% interest, which means you must return $11. Now the question is, where am I going to get one more dollar if only $10 have been created? The answer is nowhere. So invest your money in real assets like stocks, gold, or real estate. So the second thing you need to know is, who is the head of the central banks? Now let's take the United States as an example. A question that arises very quickly is, who owns the Fed? To answer this question, we must go back in time and find out how the Federal Reserve was created. The United States has not always been a great financial power. It was a troubled country. The Civil War had almost destroyed the country and the financial market was not functioning well. The United States did not even have a central bank to manage financial crises as many European countries already had. In 1906, one of the most famous bankers of the time wanted to make a fortune by pushing up the shares of United Copper, a copper company, and forcing the sellers to buy their shares to save their positions. But his plan backfired, as the sellers found another way to buy the United Copper shares. This move led the company and several other banks to bankruptcy. When news of the bankruptcy spread, depositors rushed to the banks to withdraw their savings. When the banks ran out of liquidity, they stopped lending money to their depositors and declared bankruptcy one after another. The stock market fell to historic lows. At that time, there was no central bank to restore depositors' confidence in the banks, so Wall Street turned to J.P. Morgan. He deposited a significant part of his wealth in some of these banks to restore public confidence in the banking system, and convinced other wealthy bankers to do the same. And he saved the entire economy from a crisis that God knows how long would have lasted. At that moment, the United States realized that it could not rely on the goodwill of the bankers. They had to create a central bank to intervene in these circumstances. But it wasn't easy because the system involved too many opposing parties, from politicians representing the people to Wall Street bankers and other wealthy individuals. More than 100 of the richest Americans met on Jekyll Island, Georgia, to decide what to do. And in 1913, the Federal Reserve was created. But the Fed is not just a bank. It consists of 12 banks spread throughout the country. Each bank is required to maintain 6% of its capital in the regional bank's reserve and in return holds shares in the same bank. What it means is that the Fed is simply owned by the rest of the country's banks. It seems that the system could not be more distorted, as the big banks control the only bank that has the power to manage crises and is capable of printing the dollar. Each big bank in the United States is a public company, which means that by buying their stocks, you become one of the owners of these banks, and indirectly, an owner of the Fed. The third thing to keep in mind is that your bank is not your financial planner. What most people do not understand is that banks do not act in your interest. Their purpose is not to help you become financially free, or to get the best deals, or to solve your financial problems or difficulties. Banks are profitable companies that act as accountants to their shareholders, and are therefore like any other company. They will act in their best interest by selling products and services that benefit them and not you. Your interests may sometimes align with theirs, but that doesn't always happen. So every time a bank suggests you do something, it doesn't mean they're giving you the best possible advice. Before trying to sell you that product, each bank teller received extensive training to learn how to convince you to pay for that service. So think for yourselves before accepting an offer. Always make sure to compare the rates with those of other banks and do not let yourself be manipulated by the kindness with which they treat you, because this could cost you a fortune in the long run. The fourth secret you should know is that the richer you are, the less the banks charge you. The main objective of banks should be to take money from those who have more and lend it to those who need it. That is why banks were born. But since then, the financial system has evolved. When you live paycheck to paycheck, you are not valuable to banks. They can barely take money from you. At best, they can offer you a small mortgage and a credit card. And therefore, you are not a valuable customer. However, if you are a billionaire, for example, banks will offer you much more favorable conditions, hoping that you deposit your money in their bank or choose their bank as the main one for your activities. This is easily visible in the interest rates that banks usually offer to the ultra-rich, which are much lower than the average rate. The last thing I want to teach you today is that a bank is a place to park your money and not for investing. Some people feel frustrated when they see the low interest rates of banks nowadays. It is almost impossible to get even 1% rates on your money if you decide to invest in fixed deposits, but it was not always like this. For much of history, lending money and charging interest have been a profitable business. This is no longer so because today money has no intrinsic value. So banks are no longer considered as investment instruments. Let's see them more as institutions for managing our money. If you still desperately want to keep your money in the bank, try buying their shares. Goldman Sachs, one of the largest commercial banks in the world, for example, it pays a dividend rate of 2.1, which is much higher than the fixed deposit rates at other banks. Furthermore, you will benefit from the increase in the stock. And most importantly, not only will you keep your money in the bank, but you will also be one of the owners of that bank. Now that you know all the secrets of the banks, like the video and follow me so you can further improve your finances.